The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. Time for a live look at Bitcoin. The CoinDesk Bitcoin price XVX index is currently at $41,502. Bitcoin is sliding up over 4% over the past 24 hours. The CoinDesk Ether price ETX index is at $3,109. ETH is also making an advance of almost 3%. The DFX CoinDesk's DeFi index is at 412. It is taking a step back about 0.4%. Joining us now to discuss the crypto markets is Paul Veradittakit, partner at Pantera Capital. Hello there, Paul. Thanks for joining us. So, taking a look at the crypto markets, mixed results right now. What is your strategy when navigating these markets?
Yeah, so I mean, obviously the crypto markets are down right now. For us, I mean, we are long-term holders. For us, we believe that there may be catalysts on the macro side that push Bitcoin price or cryptocurrencies up, especially if there's anything related to inflation. But at the end of the day, I mean, we're looking at this, similar to what Cameron mentioned, we're looking at this as technology, and we're looking at this as asset diversification. From what we've seen with our investor base, 2 or 3 years ago, it was 75% retail and 25% institutional. Now, as we are raising new funds, we're seeing that our investor base is 75% institutional and 25% retail. So we're really starting to see institutional capital, see cryptocurrencies as an asset class that needs to be part of their portfolio. And of course, there's some more, sort of tech savvy investors that look at this and really see the potential for faster, cheaper payments for disruption of Web 2.0, for building new decentralized applications that can disrupt legacy incumbents. And so for us, we just take a long-term view, and we continue to be fully exposed to the market right now. And, we just had more capital come into our funds, and you guys may have seen that we had more inflows coming into Bitcoin. We had more inflows coming into our funds that are providing diversification across both the liquid and private markets. And so investors right now are seeing this as investors in our funds are seeing this as a healthy correction, seeing this as a buying opportunity. And for us, we're buying into it. We're continuing to invest into liquid markets right now.
Paul, point well taken about the long-term view, but I'm just curious, what is your explanation for what's going on right now in the markets? I mean, 2022 is off to a pretty rough start. As always, there are many different theories out there. What's yours?
Our theory right now is that it's a healthy correction. We're going to see pullbacks like this happen along the way. I think what's different between now and let's just say 2018, when we had a much larger drawdown, is we are seeing more permanent capital that has come into the space within the last year or so. And so with that permanent capital means a couple of different things. I mean, probably means a bit more correlation with the traditional markets, a little bit more, but also it just means that when markets get a bit overheated, we're going to see pullbacks like this, but we won't see the same sort of drawdowns that we saw in 2018, 2019. So we see it as being very, very healthy. And, we feel that Bitcoin and Ethereum have hit rock bottom, and it'll slowly grind back up. And what will help it grind up even faster will be, whether it's a little bit of help from the macro perspective, or whether it's more use cases that really kind of push cryptocurrencies out there to be used by retail and institutions. And that could be both from a financial DeFi perspective, centralized finance perspective, or it could be from other sorts of use cases around decentralized applications.
So Paul, first of all, hello. You had a piece in CoinDesk recently, kind of a look ahead. And one of the things you did also was to look back at 2021 and see some of your predictions and whether or not they turned out. One prediction that didn't turn out for you the way you thought it would be is digitizing real-world assets. Why do you think that didn't happen in 2021? What would make it happen in 2022, 23, 24? And where's the opportunity in that space?
Yeah, that's a great question. I mean, I think there's still a lot of opportunity in digitizing real world assets. It just takes a bit longer. It takes longer to work with, bridging traditional finance and DeFi, or whether it's really, trying to figure out how to bring, things like, physical assets onto the blockchain, and making sure that you can sort of tie them together in a way that provides security, in a way that provides transparency. So when you're working with real world assets, it's just a process. And for us, what we saw was there was just other things that took a bit more priority. NFTs had a huge year. Scalability had a huge year. DAOs had a huge year. So it's just going to take a little bit longer for that to happen. I think both education kind of goes into it. And so as we see other use cases around those things that I mentioned, plus yield, that really kind of, spurred as a huge use case, especially during a pandemic where, you go to my bank account, I'm getting 20, 30 basis points for my cash. I could rather put into stable coins to get 46%. All of these other use cases, and the fact that like now there's decentralized exchanges, and all of these use cases are bringing cryptocurrencies and tokenization to the forefront. And I think once you get more education and once you get better user experiences and all of that, then there's going to be an opportunity to onboard more and more real world assets onto these platforms. And then, I think people will be, sort of more susceptible to actually use these things.
So 2022, you're going to see, you foresee a rise in both level ones and level twos. So which do you think is going to be the bigger growth?
Yeah, I think layer twos are really going to go this year. I really do think that, we've seen a lot of activity going on with Polygon, and we also are seeing, we're seed investors in Arbitrum, which is using optimistic rollups, which is another strategy around rolling up transactions and making them faster and cheaper. We've also are seed investors in Starkware, and they do ZK rollups, which is another strategy around scalability. So with a lot of the still a lot of the applications targeting Ethereum as their base layer technology to build on top of, and most of the NFT activity actually being on Ethereum right now, and you talk about how big the NFT space is going to be, really feel like layer twos, as more and more of them hit the market, and we see about 4 or 5 of them really having a chance to sort of win that particular space. I really feel like layer twos are really going to explode this year, probably even maybe more so than some of the layer ones out there. But layer ones are also going to do very well. I mean, we're seeing a lot of capital flow into layer ones. Like other investors have mentioned, it makes sense to have diversification in the space. It's still very early to sort of see who's going to win that space. You have Solana breaking out last year because of immediate low transaction costs, but you're seeing Near, you're seeing Avalanche, you're seeing Terra Luna, you're seeing these layer ones have ecosystem funds between $300 to $800 million, and that capital is going to flow into pushing more development on top of their platforms, which means more usage of the base layer currency, which means those token prices are going to go up. So for us, I mean, we see a lot of growth both in layer twos and layer ones, but I actually think layer twos are probably going to have a banner year.
All right, Paul. Finally, big hearing today with Fed Chair Jerome Powell and his confirmation hearing. What are you watching out for, and how do you see that impacting the crypto markets, if at all?
Yeah, I do think that it might have some impact on the crypto market. I mean, I'm looking for anything regarding to do with inflation. I mean, I'll go back to exactly what you guys mentioned earlier. I mean, anything to do with inflation, anything to do with any sort of policy around that will be huge. So that's what I'm looking out for.